days a year, 24/7. And if that happens, then you'll have assets, you'll have some property, and maybe you'll have a gold token. You're silly right now. I mean, a Bitcoin token, a something token, and you'll have some security assets. And that's your portfolio of investments. That's your treasury portfolio. And then you'll have your wallet, your checking account, and that'll be dollars and pesos, or dollars and euros, or something like that, or dollars and CNY. And you can see why. I mean, we're not going to make Apple Computer go away in the next 5 years. We need Apple Computer. We're not going to make the Chinese government go away. We need the Chinese government. Some stuff will go away. Weak companies will go away. Weak tokens will go away. Weak currencies, will just collapse. But wherever the currency collapses, that means the government collapses, right? I mean, didn't you just tell me that people still like the lira in Lebanon? So when the government completely collapses, then the Lebanese currency will also be gone. Until that point, what you really got is just a question of ratios. Like, what portion of your money is in each of those things, right? And if 57% of your money is in Bitcoin, and 22% of your money is in equity tokens, and then 10% of your money is in the dollar, and 2% or 1% of your money is in the local currency, then that seems rational. And you just move at the speed of light. So I guess what I would say constructively is we would be better to spend our bandwidth focusing upon the macroeconomic situation, which is, in 10 years, Bitcoin's up 161% a year for the last 10 years. Gold is up 1% every year for the 10 years. The S&P is up 14%. Long bonds are up 2.3%. Okay, so the real issue is, how do you let 8 billion people pick their mix of those macro assets? And, we can see what's happened in the past 12 months, right? Gold's down 3%, Bitcoin's up 163%, S&P's up 27%, bonds are down 6%. Okay, so what you really want to do is you just want Bitcoin to continue to be monetized, monetary assets. Real estate's monetized, equities are monetized. Why are they monetized, Safe? Well, one reason they're monetized is because you can't buy real estate and you can't buy equities on Binance. Like, Binance does a really good job of trading stuff, right? Like the crypto world, here's what we should like about the crypto world. They really push really hard this idea of let's upload any token and let you trade it 24/7, 365. Like, I mean, FTX maybe is, between FTX and Binance, they kind of put all the traditional exchanges to shame. Like, you want to monetize, or if you want to liquidate property, it's 6 to 12 months and 6% fee, and mountains of pay for it. So it's really hard to liquidate it once I'm into it, and it's hard to buy it. How do you buy a piece of Las Vegas real estate if you live in South Africa? Can't, right? So I feel like the discretionary money is finding its way into crypto tokens, but it's quite possible if we tokenize all the other assets in the world, that then there's a different balance, right? There's too much money in currency derivatives, and there's not enough money in other things. But if we demonetize some of the other things, like, if you're international, you're more likely to buy Apple stock if it's tokenized in a crypto exchange, but you're less likely to buy Apple stock if you live in America once you trust Bitcoin, right? So we have this war of capital and a flow of capital, and capital is going to flow from traditional assets to digital assets in one system, while capital flows from crypto assets back into traditional assets in another system. If all 8 billion people in the world have equal access to everything, right? Which they don't. But I think the short of it is, when you get into this issue of currency wars, you've moved into debates between nation states, and I just don't think it's a good use of time. I think it's much more constructive for us to focus upon getting people to reallocate energy from the 99% of the assets which are not currently Bitcoin and not currently digital. And if they just sweep them all to digital, right, then you'll see a rationalization of investment portfolios.
Yeah, I think ultimately what is driving all of this, the reason people have to be trading all this stuff is, as you call it, money is like an ice cube. I think if the US dollar was inflating every year, the supply was increasing every year at only 1%, I think that would just kill all of these markets. If the supply was increasing at 1%, the value of the US dollar in real term would be probably going up by 2, 3, 4%, depending on obviously which good you're looking at. But I think for most people, holding on to dollars at that point becomes a very good option. It's no longer a nothing scheme. So, of course, that's a very, very big if. We're not going to move to that kind of world. But I think I agree with you, and I don't want to be too much of a devil's advocate here, and I don't want to be putting you on the spot. But I think there's been a unstable inflation. We're going to have all that money looking for a home, and the only way this resolves is when it finds its home in the best asset. And the tricky part here is that there's no stopping this train. You said if it doubles every year for the next 10 years, if it doubles every year for the next 10 years, it's going to be around 1,000 trillion, which is $1 trillion, which is currently, in today's dollars, it's double the size of all the assets in the world. Even if it goes up by 150%, it will be at around 1,000 trillion or a quadrillion in about 18 years. So, by that time, I think there's no escaping the implications of the fact that you've basically eaten up the bond market. And really, I think the main force here and the grand prize is not so much the dollar as much as it is the bond market, because the bond market is what allows the dollar to be inflationary. It's what allows governments to continue to borrow. So
I guess my point here is why would you want to extrapolate out 20 years, imagine a revolution in the world, and then invite someone to assume you're correct and therefore shut you down now? Wouldn't it be smarter if you simply focused upon demonetizing gold? Because you might be wrong. There's a certain arrogant presumption to assume that you know what the world will look like in 15 years. There's a different world, which is, what if everything just becomes digitally transformed and Bitcoin grows as digital property and we have digital assets in the form of equity tokens, and Apple stock spreads around the world, and then capital flees from this currency to that currency, and everybody thinks the dollar's going to weaken, but the dollar's going to strengthen before the dollar weakens. And what happens is everything gets digitally transformed, and capital moves faster, and the world gets rational. And if capital flows out of sovereign debt, it'll flow out of other nations' sovereign debt first, which will strengthen the dollar, which may actually have the counter effect. So capital is going to flow out of all these things. If capital does flow, let's say capital flows out of bonds and the bond market collapses, well, the yields are going to triple, and then there are a lot of people that are holding capital in value stocks are going to sell their value stocks, and they're going to migrate into the bonds again. Right? And so you're going to have all sorts of trading for the next decade to 2 decades, and it's very difficult.